are. So that's one aspect that you have to always have to consider. The price action that we've been looking at over with David, obviously we've had the London Open, so sort of volume surge, lots of traps being laid, and my Euro Aussie kind of didn't really do very much, because as we can see here on the 5-minute CSI, we had this this burst of activity in the euro with buying coming in. The Aussie was still going higher, but in the turn higher from the euro, it meant both lines both were going in the same direction. And what that tends to happen is the pairs continue, they just move sideways. There's no divergence, and this is something you have to be aware of. Obviously, with London, if you're in a trade moving into a major crossover session, as we have now with London, you have to decide if you either scale out, you close out, or perhaps you wait until the open has happened. Particularly if I would say if you are in a sterling in a British pound pair. But with Euro Aussie, nothing very much happened. We left it consolidating, moving between the R1 and the S1 of the Camarilla. This area here on this particular indicator is considered, we call it the buffer zone, and you will tend to correspond with price moving sideways. Now, what happens is it's obviously reaching these key levels to the downside. We've got 67.27, so if we are going to see a move through that, we're going to have to see it come, got to be accompanied with volume. Having a look at the renko, this is actually set to 3 pips. Well, it's still red. We've got some wicks to the bottom of the candle, so it's clearly, there is an attempt at a reversal. Well, I know it's an attempt at a reversal because it's coming to this key level here that I can see. Again, key levels, what are they? How we identify them on the chart. Some people use a Fibonacci. They say if it's coming to the 50, it's coming to whatever 60, 68 point, whatever it is. They will either take, they will either close out, reverse, go in. It's up to, traders use levels in very many different ways. In the Forex market, there are other levels that you have to be aware of. One of them is the option expiries. These are contracts between the major institutions, and they're digital options, and they are simply it's a contract between two of them, and it could be a touch, a no touch, a double touch. You can find those are easily available. If you go over to Forex Live, you will see for the for something like euro dollar, they'll say there's $1.5 billion expiry coming up at the what's called the New York Cup. They happen every day. If the price action is trading around that level, all sorts of weird and wonderful things can happen, as one of the parties will try and defend that level. And it's all you have to know is it's a level that is important to a major player in the market. Now, in the program, we also suggested something called the order boards. At the time we did the program, the order boards were freely available at Forex Live. One of the guys there, Mike Patterson, who's a friend of ours and a fellow trader, he would happily share that information with traders. But he got it from Reuters. He had to pay for it and share it. He doesn't do that anymore. If you want to subscribe to the order boards now, you have to subscribe to Mike's service, and he will give you those levels. Order board levels are levels placed by the institutions where they would be looking to buy or sell blocks of currencies. They don't necessarily buy and sell at those levels. There's an awful lot of spoofing that goes on in the market. A lot of chicanery goes on the institutional side of the market. The market makers, they make the market for traders, but they also trade against themselves. So if you're on the program and you want these order boards, you will have to subscribe to them in some way. As I said, at the time we wrote the program, they were freely available. But there is a way of identifying or being aware of the levels. The order board levels are always at 0s and 5s. They're not at, strange numbers. So 0 and a 5 on your chart. For a start, you should never put your stop loss there, but just be aware that when the price comes to a 0 or a 5, the chances are somewhere along there may be some orders waiting to be fulfilled for one of the major players. Our indicators are based on price action and volume. So the price action based ones, the support and resistance one, the accumulation and distribution one, they will print, it will pick up the price action that is being registered by the chart, and they will print a line. There is no connection to any other institutional level, but you can have a pretty good clue that if it's around a 0 and a 5 or pretty close to it, you can be certain there are some big orders out there in the market. And what the Camarilla does, this is price based, it defines these this is price based. You know what is going to happen. If it's coming up to an S1, it will, as you can see here, it is going to pause. Is it going to reverse off here? We'll have to wait and see. You have to go and have a look at the chart. And what the renko does, if you're in there, it will hold you in this trade. But you have to be aware of where the price action is in terms of these levels, either based on the Camarilla, on the accumulation and distribution if you have NinjaTrader, and or as I have here on MT5, as I've said, the solid line means it's a stronger region of resistance. The dashed line means it's a slightly weaker level of support. And as I said, you go through your time frames. I've got the renko set at 3 pips. I've got the 3-minute chart. I want to know where this price is going, because I want to know at which point everything reverses at some point, where it's going to reverse. And that is where I particularly use the Camarilla. It's come up to the S1. It's trying to break through, hasn't broken through yet. If it does, with volume, where's it going next? I've got my next level based on my Camarilla down at S2. Nothing is guaranteed, but at least it gives me a potential price objective. The volume-based resistance and support are based off the volume point of control. This is where volume, price, and time come in. These are these lines. They're not lines. They're sort of shaded areas here. This is now moving quite fast. When price starts to move quite fast, I also have to be aware when momentum comes in the market, the chances are I could get volatility come in, which is great because I've got some movement now. But the downside to that is it could trigger the volatility indicator that we have here, which is this purple dot, sometimes the little purple arrows. That means the price action going through the market at the moment is outside of the average true range for this particular instrument. That's it, bang, the volatility indicator has come in. And oftentimes when that happens, the first thing that happens, the price will reverse straight back into the indicator, and it is actually a great indicator to say, do you know what, momentum and volatility are fine, but when you're in a move such as this now, possibly the time is now to come out. And in fact, if we come over to the Camarilla, in fact, it, as you can see here, it didn't quite get to the S2. Support and resistance levels, you have to allow them a little bit of flexibility, as it were. They, nothing in this in trading is set in stone, as it were. They're just, it's an art. Technical analysis is not a science, and it's certainly not some kind of strict mathematical model. If you as a trader find flexibility, interpreting information, you have to be a little bit, open. What I'm trying to say is, if you want a definitive system, in the sense that you want to know when to get in, when to get out at precise moments, you are going to struggle being a discretionary trader. And what we do here, what we have developed here, we have developed a system, a methodology, VPA and the indicators, but you have to apply them in a discretionary way. If you want to systemize this and you want almost like a robot, then you are going to struggle. But then you're going to struggle with any discretionary approach, as it were. Down to your personality. Can you change? Yes, traders can change, and you can, but it's down to you. It's down to your personality. If you want fixed rules, fixed checklists, do this, almost like a computer program. This happens, you do that. That happens, you do that. Then you will have to, get someone to program something for you. But the way we trade, the way we are teaching traders, and it's just our approach to the market is we have a method. It's not a system, it's a method. We have indicators. They give us a whole bunch of information, but it's down to the trader to then interpret that, understand it, and then interpret that. Anything you want to add to that, David? No.